Job openings and labor turnover survey, also called JOLTS, that was released this morning. Joining us now to break it all down is the labor market. On the labor market is Allison Boxer. She is a U.S. economist for PIMCO. Allison, thank you for joining us here today. We've been handicapping the Fed and what might happen with that big decision tomorrow and the Powell presser. Lots of people saying don't expect a big change, but the devil's in the details here, right?
Yes. Well, first of all, good morning. Thanks for having me. I completely agree. We're not expecting any big surprises on rate hikes. We don't think there's a lot that the Fed's going to surprise in terms of the statement. So really the question all comes down to Chair Powell's comments during the press conference. We think the question is not really around pivot, but really that the Fed is likely to pause as we think about interest rate hikes early next year. And I think the JOLTS data that came out this morning that you mentioned really underscored the difficulty that I think the Fed faces in communicating this over the next few months. JOLTS data suggested there's still plenty of economic momentum behind us. And I think that's why it's going to be so challenging for the Fed to ultimately communicate what we think will be a rate hike pause at some point in early 2023.
Well, recently, within the last couple of months, we had Neil Kashkari come out and say flat out that the Fed didn't like the reaction when stocks were up on a particular Fed announcement day when they had to deliver bad news. So I'm just wondering, what are the chances that Powell comes out in tomorrow's presser and just kind of reiterates his Jackson Hole thesis, which is I'm sticking to my guns, and we're going to hike until something breaks here?
Yeah, I think the Fed tends to, in general, avoid commenting on specific parts of the market. And really, if you take a step back, they use the sort of broader financial conditions framework. And I think that what Chair Powell is going to be trying to accomplish, is really this idea of trying to move financial conditions sideways. So we've seen a lot of financial conditions tightening so far. We think that they ultimately want to get Fed funds up to a restrictive rate and then pause, likely in probably a 4.5% to 5% range. But I think the difficulty with that is what we've seen with markets recently. There starts to be any sort of hint or commentary around this idea of pivoting or the Fed slowing the pace of hikes. And you've seen markets and financial conditions start to ease. So I think that's the challenge that Chair Powell has to deal with in communicating tomorrow. And really, ultimately, I think that means that the Fed can't let financial conditions ease too much. And that's why, again, we're focused on the ultimate pause, probably not until next year.
I want to focus in on some of that labor market data. You hinted at the JOLTS numbers that came out. We also have the non-farm payrolls. That's that big monthly report coming out this Friday. The unemployment rate expected to tick up to 3.6%. And the payrolls, that number coming, I think the street is estimating something like 195,000. How does this report fit into your thinking and what the Fed might do for December? Because this is going to be in the rearview mirror about 2 days now from the Fed announcement tomorrow.
Yeah, so I think the JOLTS data suggests that there's still plenty of momentum in the U.S. labor market. And in particular, we think that the JOLTS data is consistent with this idea that companies sort of exited the pandemic period understaffed. There were a variety of reasons why it was difficult to fill openings in 2021. So we think the U.S. labor market is playing a little bit of catch up. You see that with elevated openings. You see that with expectations that we're going to get another strong employment report for October. But, to go back to the Fed, I think it's important to keep in mind that the JOLTS data, the openings data, employment reports, do tend to be lagging indicators. And just because we've seen, really strong momentum so far, is not a guarantee that this is going to continue forever. We do ultimately think that the tighter Fed policy is going to slow the labor market. But at least for now, JOLTS is very consistent with strong momentum.
Question of when, not if. Really appreciate your thoughts there. Allison Boxer, PIMCO U.S. economist.